This is the only trading strategy you're gonna need in 2024. Very simple, very effective. I've covered this many times in the past. I'm gonna simplify it even more for you guys. So lock the fuck in, get a notepad, get a pen out, and I'm literally gonna explain this as simple as possible and make it as rule-based as possible and actually show you guys it with live price action as well as a price action over the past few days, because this strategy has just been fucking crushing it. Make sure you watch this video until the end. 50% of people who have clicked on this video have already clicked off it. That is the attention span nowadays. People just can't fucking sit still and take notes on a video. So if you actually want to make a change and improve yourself as a trader, then just dedicate 10 minutes to watching this video, okay? And I'm gonna share all the sauce with you guys. So how does this strategy work and how can you use it to make some moolah, to make some money, okay? So step number one, you want to go to a 4-hour time frame, okay? This is the time frame I use. People say higher time frame. What does higher time frame mean? It means the 4-hour time frame. So go to the 4-hour time frame and you want to make sure that price is at a key level, all right? So you might be wondering, what is a key level? Well, a key level is a level that has confluences. Confluences is what makes a trade high probability or not. The amount of confluences that you have, the number of confluences. So a confluence could be a key support or resistance zone. This could be a key fib level. This could be a fair value gap. This could be a swing low, right? A swing failure pattern. These are the confluences that you want to look for. And I use what I just mentioned. I also like to use the fixed range volume profile here in TradingView, right? This is another confluence that I like to use. But again, we don't need to see all of them line up. We just want a few of them. So in this case, on the 4-hour time frame, I saw that Bitcoin was at a key support zone. It was a key support zone with price history, meaning we had previously reacted from this level as support. We had failed this level, reclaimed this level, and now we're testing this level again, right? If you go into replay mode, we're testing this level again as support. And I also posted this inside of the Pro Discord. And we also had our golden pocket fib level overlapping this zone, or our optimal trade entry. So the optimal trade entry is the 0.618 to 0.786 fib. All right, this area right here, okay? This area in between the 618 and the 786 fib is going to be our optimal trade entry, okay? Our optimal trade entry. This is where we want to start looking for buys on a lower time frame, right? We can also see we have some bullish divergences here on our oscillator as we come down to this level. So now that we have our key level marked out, what does that mean? Do we just want to enter a limit trade off of this level alone? Maybe, right? Maybe you want to enter a trade here. Okay, maybe you do with some DCA orders. But what I like to do is I like to go to a lower time frame and look for confluences. That to me is more high probability. So I'm not trying to catch a falling knife, right? I'm not trying to enter a trade here because for all I know, price could just keep going through this level and stop me out. How many times does that fucking happen, right? Setting limits. So what I like to do is go to a lower time frame, such as a 15 or 5 minute, and look for a break of structure or a bias flip. So I'm gonna type this out, okay? A bias flip. So what is a bias flip? You might be wondering. That is a market structure shift, a break of structure. You can call it whatever the fuck you want. I like to call it a bias flip because in my head, that's what it is, okay? It's the bias shifting from short, because we were in a downtrend up into this level, to long. So the bias is changing, the bias is flipping. So I like to call it a bias flip. Let's go down to the 15 minute, okay? So we are going to let price action play out. So this is what a bias flip looks like, right? Let's say you're in a downtrend, lower lows and lower highs. You'll notice that in a downtrend, okay? In a downtrend, these highs are going to be protected, right? Protected highs. What does that mean? It means that price does not come up to retest these highs, okay? Price does not come up in a downtrend to retest these highs. And if it does retest, it won't close above this high. It'll just sweep this high, right? That's a swing failure pattern. When we get a bias flip is when we see this, right? When we were in a downtrend and we get that candle close above this high, okay? This marks the end of a downtrend and the beginning of a potential, right? A potential uptrend. Now, could it keep going down after the break of structure to the upside and break this low? Yeah, it happens. That's part of the game. You're not going to win 100% of your trades, but there are things we can do and things we can look at on the chart to help avoid that happening. And that is displacement, right? We want to see displacement closing above this high, creating a bias flip or a valid market structure shift, whatever the fuck you want to call it. I'm going to call it a bias flip, okay? Because I'm different and I want to call it a bias flip, okay? So we want to see that bias flip, and we only get this bias flip, in my opinion, by my definition of a bias flip, is when we close above multiple candles with displacement. If we do not see multiple candle closes above and displacement, then it is not a bias flip, okay? If you want to enter the trade, it's going to be higher risk, okay? So if you don't have displacement, if you don't have that valid break of structure, what does this mean? It means HR, okay? I'm not talking about the HR department. I'm talking about high risk, okay? This is high risk. So just keep that in mind if we don't have that displacement, which in my opinion, you definitely want to see on the charts. Let's remove all this. So now that you understand, what a bias flip looks like, we have our daily bias in place here as well, right? Where we understand that we're at a high time frame key level. We want to be looking for longs. So we're going to wait for that bias flip. This is the most recent high, okay? Lower lows and lower highs. Again, these highs, as you can see, are protected, right? Price does not come up to close above these highs. That means we are in a downtrend. So we want to see that clear bias flip to the upside. So some might say that this is the bias flip. So we're going to let price play out. And actually, we're going to go to the 5 minute. We're going to get a little bit cheeky and we're going to go to the 5 minute time frame. This is where I really like to enter, using some confluences on the oscillator. So again, if you were to say that this is a bias flip right here on a 5 minute, boom, right? Now you can look for long positions. So we're going to get our fib tool out, okay? This is a built-in trading view tool. It's absolutely 100% free, okay? It's called the fib retracement tool. You guys should probably know what I'm talking about. And you want to go to the most notable swing low. So there are a lot of swing lows here, right? We have this swing low, right? We have this swing low, okay? Which swing low do we use to find this entry? And we, of course, have this swing low. Okay, for me, the key level I'm looking at is going to be this swing low, right? The major swing low. But if you want to get a little scalp entry on a lower time frame, you can use, this swing low right around here. Okay, this is going to be the swing low that I would use, this or this. So it depends on where you draw the fib from. When in doubt, draw it from the lower swing low, because you're getting a more discounted price. So if you're trying to figure out, should I draw it from this swing low here or this swing low? I would recommend using the one that's lower, because it's going to give you a more optimal entry. So in this case, I'll draw it from here, okay? And we're simply going to enter at the golden pocket, all right, the 0.618, with a limit order at the 786, or go down to a lower time frame. So there's two ways to enter the trade, okay? There's two possible ways to enter the trade. One is going to be via setting limit orders. So that's going to be one limit at the 618, one limit at the 618, and a second limit at the 786, with your stop loss slightly below the 786, okay? This way, if price fills your 786, your average entry is going to be right in the middle. And we're gonna be targeting that high as take profit. So that is a massive 4.5 risk to reward ratio. Pretty fucking cool, right? 4.5, that means you risk 100, you make $450, right? Insane, mind blown, right? So there's two ways you can do it. That is the first way. The second way is you can go down to a lower time frame, a 1 to 3 minute, and look for market entries with some bullish divergences or buy dots on the easy oscillator. Now this is my own custom algorithm, so if you don't have this indicator for yourself, click the first link in the description below. It is a paid indicator. You will get access to the pro Discord where I'm sharing these setups with you guys, as well as a bunch of other shit to help you make some fucking money in the markets. So if you don't have it, click the first link in the description below. If you want to use a free alternative, you can use Fu Manchu Cypher B. That's a free indicator. But I don't use Fu Manchu Cypher B because I made this, which is better in my opinion. So I use the easy oscillator. So like I said, go to a lower time frame, look for buy dots or bullish divs. Here we go in the 3 minute. Boom. This is your entry on a lower time frame with your stop loss below this low. And again, you're targeting this high. So look at that risk to reward. That's a 6 risk to reward. So this will give you a larger risk to reward ratio. But keep in mind, boom, you see shit like that, right? So you do get stopped out more. And let's see, stops us out. Another bullish div. Okay, so if you want to keep entering, you could do that, right? Okay, it eventually hits take profit, okay? So this is one way to do it. Or you can just set limits, right? Which is the better way, in my opinion, doing this, right? So you can set limits, which would be one limit here at the 618, and the other limit at the 786 with your stop loss slightly below. Okay, so this is going to be your trade entry. Okay, something like this, targeting that high as your take profit. And if it fills your 786, your average entry is going to be here. And if it doesn't fill your 786, then your average entry is going to be at the 618 fib level. Okay, so that is in essence what you are looking for. We're going to let price play out. Still in the 5 minute. Actually, we'll go to 15 minutes, speed things up a little bit here. Okay, and the great thing about this strategy is once you have that bias and once you have that confirmed bias flip to the upside on a lower time frame, you can repeat this over and over and over again until price takes out some of these external liquidity levels up here, until it takes out these highs. Then you obviously want to do the same thing, but for going short, okay? But in this case, right, like I mentioned at the beginning, this was to some a bias flip. I want to see a clear close above this level with displacement. I haven't really seen that yet. Boom, boom, boom. You want to see it, boom, boom, okay? You see that? That is a clear close above this high, right? We have a bias flip to the upside, continuing the trend to the upside. We also had a sweep of this low first, okay? This is called a swing failure pattern, meaning sellers tried to push price below this level, but they couldn't do it. Buyers stepped in. We had that buy out on the oscillator, boom, price goes up, okay? And we can do the same thing over and over and over again. So go to the 5 minute, draw your fib from that swing low to that swing high, okay? Again, we have 2 swing lows to draw from. So either one of these are valid, right? In an uptrend, okay? So this is gonna be the more high probability trade down here, but price won't always go down here, like I mentioned. So you could also use this major swing low here on a 5 minute, okay? And again, this is displacement. You can see clear fair value gap, clear bullish fair value gap, leaving behind bullish order blocks, right? Order blocks here. We have support, or sorry, previous resistance that we're now flipping into support. So a lot of confluences here. And keep in mind, my entry is on a lower time frame, right? My entry is on a lower time frame, but because we have that daily bias in place, because we're waiting for that bias flip breaking structure, we know that longs are valid. So again, you can place your first limit here, stop loss somewhere around here, targeting this high as your take profit. All right, 2.81. Let's see, hits our take profit. Because it didn't fill the 786, we don't have an average entry in the middle, right? It's just at the 618. So again, almost a 3 risk to reward ratio. Now, again, what are we looking for? Well, we are looking for the continuous bias flip or break of structure to the upside. Remember, as long as price continues breaking structure to the upside, we can repeat this formula over and over and over again. So still waiting. Again, we're waiting for this high to be closed above, right? Boom. Okay, we got that break of structure, but we want to see price hold. Okay, it looks to be holding. Cool. I'm gonna draw my fib from this swing low to this swing high. Okay, we also have displacement here. You can clearly see on a 5 minute, we have displacement, right? Sweeping this low, inverse fair value gap, bias flip to the upside right here. So this confirms our trade. Again, we're gonna get our tool out, right? Set limits or go to a lower time frame for entry, up to you. In this video, I'm just gonna be showing it to you via limits. Now, when you're setting limits, something else I would do if you're gonna do the limit setting route is use the oscillator to help you. Only set limits if the oscillator is approaching this oversold zone. So here we can see, boom, tags into our entry. You can see on a 3 minute that the oscillator was oversold with that buy dot, right? Approaching that oversold. Boom, hits our take profit, right? Another 2.7 RR, and it continues breaking structure, right? Continues breaking structure to the upside, okay? So this is referred to as an aggressive pullback, okay? We have very bearish candles leaving behind fair value gaps after sweeping this high. So this is gonna be a little bit more high risk for a long position here, but we're still gonna do it, okay? We're gonna draw our fib from the swing low to the swing high. And again, there are multiple fibs to draw from. So you can draw, you know, from this one, or from this one. So we have 2 main long ideas here, okay? 2 main long ideas. Here we see on the oscillator, it's not even oversold. So personally, I would not take this trade, okay? On the 3 minute, I would not enter this trade because of the aggressive pullback and the fact that the oscillator is not oversold. But we're gonna play it out anyway. And there it is, okay? So yeah, it did what I thought it would. It just broke through that level. So that's the importance of watching for aggressive pullbacks and using the oscillator. So good thing we didn't take that trade. If you did, would have been a stop out, -1R. But this trade I would take, okay? We see the oscillator flipping, right? So maybe enter it right here. Or if you want to set limits, you know, this is your trade targeting these highs, okay? Let's see what happens. Boom, hits our TP, and our average entry is in between these 2 levels, the 618 and the 786. So I'll actually remove the 6.5 because that's not really part of this. So we have the 618, the 786. Okay, our average entry is in the middle, and we're gonna be targeting this high. Another 4.5 risk to reward ratio. And we also had other confluences here. We had a breakout and retest of this high, sweep of these lows. You can add other confluences as you wish, but this is the gist of it, okay? And now, to remove all drawings, we can continue doing this because price is continuously breaking structure to the upside, okay? Until, right, let's go to a slightly higher time frame, until these highs are getting taken out, right? Until these highs get taken out, okay? So we're gonna wait. So still breaking structure. Again, close above this high. So in this case, I'd get my fib from this swing low to this swing high. Okay, perfectly overlaps that bullish fair value gap here. So this is another valid trade setup. You could also draw it from this swing low down here. Okay, so these are going to be my trade ideas. I want to see how price reacts as it comes down to this level. I don't want to see an aggressive pullback, and I want to make sure that the oscillator is oversold as it approaches these levels. But again, my bias is still bullish because we're still breaking structure. Play out, kind of ranging. So here we are now. So in real time, we're going to start with this level here. This is kind of the main level that I'll be looking at to take a long position, somewhere in this bullish fair value gap, retesting these highs, and it's in our optimal trade entry, or below the 618 and above the 786. So this is going to be our long zone. We also have some other confluences as well. You can see this level was previous support, right? Support, broke through, acted as resistance, and now we'd be looking to test this level as support again. So it looks like right now we are consolidating, which would be bullish if we get a sweep, right? So this would be my long idea. And this is in real time, guys. I'm showing you in real time, what I am looking at and what I'm posting in my pro Discord. And you'd be targeting the high, right? So that's a 3.5 RR if we get the entry there. This is referred to as a sweeping pullback. So there's 3 types of pullbacks. I'll make another video on this, but there are aggressive pullbacks where you don't want to take a trade. That would be if price shot up and then immediately shot back down with bearish fair value gaps, right? That is an aggressive pullback. That's a more risk on trade. We have a corrective pullback, which is a nice soft landing, right? A soft landing into your entry zone, right? So that's another valid trade. Or a sweeping pullback, which is a type of corrective pullback where you see price kind of consolidating here, and then you get one sharp drop into your zone and then you long, okay? So this is also a valid trade entry that I'm looking at now currently. That is my most simple and effective strategy. As long as price is continuously breaking structure to the upside, you can continue to use this strategy. Of course, you want to use other confluences too. You don't just solely want to use fibs, and that's what I'm trying to show you guys here, with these support and resistance zones, with these fair value gaps, etc. So you want to use other confluences as well. But that is it for this video. Leave a like if you have enjoyed. If you're not in the pro Discord, first link in the description below. You are missing out, my friend. And just leave something down in the comments below if you found value from this video. I hope this helps at least some of you guys. That's it for me. See you guys next video.